Hey guys, welcome back. Now since the last video, markets have dropped really hard. The S&P was down 5% on Thursday and another 6% on Friday. So some really big moves to the downside after Trump announced basically a tariff war on basically the entire world. Now let's take a look at a couple statistics. Friday was actually one of the worst drops in the S&P 500's history. We go back to April 2000 during the dot-com crash. There's a day where it dropped 5.8%. In 2001, 5%. During the global financial crisis, it had a 9% drop. Then in 2011, after the credit downgrade, almost 7%. And then, as we all remember, during the COVID crash, it had a huge minus 12% day. So we're going through a historical moment. And actually, in the past 97 years, there have only been 2 consecutive days of 5% declines. Once in 2008 and today. So this is really a history that we're living through. Before we get into the 5 stocks that I recommend buying during this crash, I just wanted to show you guys this. This is a 10-year chart of the S&P 500 going from 2015 to today. And you can see that the RSI, the Relative Strength Index, has dropped under 30 only twice. It did it yesterday. It almost hit it in 2022, marking the bottom a few weeks later. And then during the COVID crash, and it also marked the bottom a couple weeks later. And in 2018, during the first set of Trump tariffs, we just about hit it before setting a interim bottom a few weeks later. So it shows that this is really a great time to be buying stocks. So the first stock you should be buying today, I believe, is Amazon. Now, why Amazon? Their P/E ratio is currently the lowest it has ever been in their history. As you can see, as it was becoming a profitable company, the P/E was extremely high, above 100. And since 2018, it's been slowly trending down into the 70s, the 60s, the 50s. And in 2023, it started going under 50, 46, 39. And today, we're finally at a P ratio of 30. So this is the most attractive valuation Amazon has ever been at historically. Now, their AWS business is also growing at high double-digit growth right now. And that's going to continue for several years. They're also in the early stages of being a profitable company. It hasn't been that many years. So they have several years of expanding profits and operating leverage ahead of them. And one final thing is that they have a potential bid in TikTok right now. And I think if they could add a social media giant such as TikTok to their business portfolio, it could really take them to really another level. Now, the second stock I recommend right now is Google. Now, they've been hit pretty hard because of antitrust regulation issues and also an overall concern for their search business. But I think these concerns are overdone because their cloud business is growing really strong. They're at a forward P of under 17 right now, which is extremely low for a company still growing revenue at double digits. And I think that as people use ChatGPT more and more, that it's just growing the overall search business. People are creating new search queries. When you're looking for a restaurant or a cinema nearby, you're still going to use Google. You're not going to ask ChatGPT for those sorts of questions. I think they have their own markets. People have questions that they will ask ChatGPT, and they'll have questions that they'll ask Google. Besides getting a share in a really strong search business and a world-class cloud business that's growing fast, you're also getting what you could consider a call option in the autonomous vehicle space with Waymo. They're growing really fast right now, and they're the company that has the most autonomous miles driven as of today, even though Tesla is planning on deploying their platform this summer. Waymo is currently the only one doing that. And finally, you also have a small quantum computing call. Quantum computing will probably be something people talk about 10 years from now, but if anybody's going to do it, Google is ahead of the race along with Microsoft right now. The next stock I want to talk about is Robinhood, ticker symbol HOOD. I think they're one of the biggest innovators in the fintech space right now. They're in their early stages of profitability. They've been profitable for only a year, so lots of runway to go. They have a strong customer base that's growing very fast, and it's a young customer base. I think that this is one of the biggest themes for this company, is that as older folks who are using traditional banks grow older and older, the new cycle of investors are tech savvy, and they're using Robinhood, and they're going to get richer and richer as they grow older. And I think they're just going to replace, slowly but surely, clients that were in banks, and they're going to transfer over to Robinhood. Quickly looking at Robinhood's chart, it went all the way up to $67 here in February, and it has since dropped back down about 50%. Now on Friday, it wicked pretty hard down, but closed the day quite strongly, bouncing back almost 10%, hitting the 200-day moving average. So I think any buy between $35 and $25, even though I'm not certain it'll get there, is a really strong buy for the future. Now, last but not least is Nike, one of the most recognizable brands in the world. I think it's an absolute buy today. It's been wrecked for the last 2 years, going down from $170 to now $55. I think with the tariff situation, Nike, among all the shoe retailers, has the strongest balance sheet to navigate this sort of environment and even a potential recession. I think they could come out, again, the strongest company out of a recession. And in terms of the tariffs imposed on countries where they manufacture their shoes, such as Vietnam and Cambodia, the day after Trump announced those tariffs, those companies already began having talks with the president to potentially lower the tariffs and make a deal. And that's why it popped 3% on Friday, actually, drastically outperforming the broader market. And I think if the management team can execute properly on Nike, it could really be like buying Meta under $100 a couple of years ago, where you really get a world-class company at a major discount. And not to forget, Nike is also paying now a 3% dividend yield, if, of course, they don't cut it, but I don't think they will. So those were the 4 stocks I recommend buying during this Trump tariff market crash. Let me know what you guys are buying. Also, I'd greatly appreciate it if you subscribed, and have a great rest of your day.